Hi guys, just come out of a really good trade on the DAX. Been trading the 1 minute chart this morning, and the trade that I took was a double top trade. In fact, there were several double top opportunities this morning, early market, and as the market opened, we're able to take advantage of an excellent opportunity. So I'm going to talk you through this double top trade from start to finish, explain why I took the trade, and also the target that I set for the trade and the reason that I exited where I did for profit. So I'm going to talk you through that using the chart behind me. Okay, so first of all, what I'm going to do is I'm going to introduce you to the charts that we've got in front of us here. So these are this is the 1 minute chart, and there are two versions of the 1 minute chart on the DAX. So on the left hand side here we've got the line chart, and that's price being represented on this black line. The lines joining up the dots between the closes in each time period. So that's the left hand side of the chart, price represented by a black line, and on the right hand side of the chart price is represented by candlesticks. And I use both sets of information, the information from the line chart and the information from the candlesticks, to make my trading decisions. I have identical charts generally set side by side. They're nearly identical anyway. You can see the time frame slightly longer on the line chart than it is on the candlestick chart here. And so the two sets of information together allow me to just basically look at one time frame, because I find that I'm able to get a proper representation of what's going on, quite easily figure out whether the market's trending or ranging using the line charts, and then the detail comes from the candlestick charts. Now, on both charts we've got some moving averages, two moving averages. We've got the 8 and the 20 moving averages. The 20 moving average is the red line, the 8 is the blue line on here. And again, that provides me with context. So whilst price is above the moving averages, then it's going up. And when it's below the moving averages, then price is generally going down. Okay, you can see that on here price is briefly below the moving averages here, briefly below the moving averages here, and it's going up. And when it's coming down, it's briefly spending time above the moving averages, and then it's going down. So as the market's falling, traders are selling from the moving averages. Okay, so that provides me with context. Okay, so what I mean by that is when price is near the moving averages, I'm looking for what else can I see from these charts that tells me that the market is likely to move. Like I say, likely, there's a probability that the market will move in the direction that I think it's going in. Okay, so I'm looking for candlestick patterns, I'm looking for chart patterns within the price action that tell me that I'm likely to be right with my decision. And that's why I use the candlestick charts as well. Okay, so same moving averages, red 20, blue 8 on the candlestick charts. Okay, so this chart starts here 5 a.m. This chart starts here about 6 a.m. and we've got the price action from 6 a.m. through to 8:30 a.m., which is where we are now. And market, the DAX opens at 8 o'clock UK time. So this is 8 o'clock here on the line chart. This is 8 o'clock here on the candlestick chart. And so pre-market, the price was rising, and it was rising but not convincingly. And there were, you look at these charts here, and each one of these zigzag lines potentially gives an indication as to where price is heading. When it's making higher highs and higher lows, like it is in this zigzag action here, then it's going up. When it's making lower highs and lower lows, like it is here in this zigzag action, then the market's moving down. Okay, these are very brief trend legs, but they're normally sufficient to provide a good risk to reward trade on the DAX. The DAX tends to provide good volatility, and quite often it provides good breakout opportunities as well. So that's why I trade this particular market. The DAX is known for its big breakouts and also for false breakouts as well, which trick traders. But if you know what to look for, then you can very often avoid the false breakouts. Okay. So within each one of these zigzag movements, there's a trend change. Within each of these legs here, there's some sort of trend change. Okay, and what I mean by that is that the market changes from rising to falling to rising to falling to rising, and somewhere between the stage where it's falling and where it's rising, there's a trend change. There has to be a trend change, and quite often that comes in the form of some sort of double top. You could say that's a high and that's a high there, and then the market starts falling, and a double bottom. That's a low and that's a low, and the market starts rising. That's a high, and the market starts falling. That's a high, market starts falling. So the market moves in phases, call them legs, where it's rising, then it's falling, it's rising, falling. And quite often these legs are separated by double tops and double bottoms. When the market's rising, it's more worthwhile and higher probability looking for double bottoms. You could see a double bottom here, so you've got a low, higher low, and then the market rises. And when the market's falling, it's worthwhile looking for double tops. So you've got a high here and a lower high. That's effectively a double top, and the market starts falling. Okay, so with double tops and double bottoms, you're looking for the second trough on double bottoms to be weaker than the first, and on double tops you're looking for the second high to be weaker than the first high, indicating a likely trend change. So here you've got a high and a higher high, which isn't ideal, because it would indicate that prices are still rising if you're getting a higher high as the second high. And you can see here you've got a high and a second high, this is lower than this one. The market's going up, then falls, tries to push up and make a higher high, and fails. And as it fails, you can see the bears getting stronger, big red bear bars, and the market starts falling. So this is all pre-market. You can see the time here, 7 o'clock, 7:30, and there's a good double top trade in here. There's a high, second high, market falls. High, second high, market falls. But that's just before 8 o'clock. I'm watching this, I'm watching it, and I'm saying, okay, who's got the strength this morning? Is it the bulls or the bears that are on top in the market? And these double tops here are indicating that as they come to fruition, as they pay off, that the bears have got the strength. They've probably got the edge over the bulls in the market as it stands at the moment. And a good successful double top here, good successful double top here, high, lower high, and each one of them met their target, reached their target. So I'm on the lookout for double tops. So 8 o'clock comes along and the market starts falling, and this double top here, high, lower high, this is the middle of the pattern. As the market goes past here, goes past the middle of the pattern, traders are going short. They went short and took their profits, And so then the market makes its way back again. So the traders that go short in here have to come out of the market and buy. They're shorting, they cover their shorts, which means they buy, and the market rises as they do that. And it rises, but it fails to go up. And in here we get a nice candlestick pattern. We get a green pin bar followed by another strong bear bar here, with both with pins on the top. This is a micro or a mini double top in here. Sometimes I trade those, but not today. And the market comes down and it fails to make a new low here. This low here is almost identical to this low here. There's actually 0.5 points difference between the two. This is slightly higher, but the market's coming down. We've got a high here, a low, a lower high here, and a low, lower high here, lower low, lower high, lower low, lower low. So the market's downtrending, and as it comes up here and you get a good rejection, these two spikes here, double top, micro double top here, provide evidence that the bears are selling every time there's strength, some sign of strength in the market. So the market comes down and I'm on the lookout, and I notice that the low here is just slightly higher. However, that doesn't concern me necessarily because the price is below the moving averages here, and it's consolidating below this round number, the 11,450 level. All the evidence suggests to me that, okay, the market comes down, let's let it pull back a little bit and see whether we get anything that's worth trading. And so when we get rejection at this level here, we've got another push higher by the bulls, and then we get a red bear bar. And I'm on the lookout at this stage. This equates to this here. So this is the first high, middle of the highs, middle of the double top as it turned out, and then the price stalls on its way back up and fails. So what I'm looking for here is I'm looking for price to go down below the middle of the double top. Okay, so this is my risk, the difference between here and here. So I'm looking for an entry here, and I'm looking to get out, if I'm wrong, just above the second high, the lower high here. Okay, so if price comes from here and goes up to this level here, then I would be out, and that would be a losing trade. And the reason that I would get out is because the market would be indicating a possible trend change if it came from here and went up and made a higher high. As it turned out, as you can see, it didn't. And what happened was I got into the trade here, got a tiny little bit of slippage thanks to my broker not executing my order in time, but only a little bit on this particular occasion. I had to wait to see price at a level below this middle here, otherwise the trade was not valid for me. And what I'm looking for with these particular type of trades, we're not short off the open here, and the market's moving quickly. It's already come down quite a long way. I'm looking for at least 1-to-1 on my risk to reward, so I'm looking for a reward of 1-to-1, and you can see that 1-to-1 was reached here. Okay, so I've literally just come out of this particular trade. Always look to cover my risk in the reward that I get and the fee as well. So I was just looking for slightly over 1-to-1 risk to reward, and we got it here at 11,410 if you want the numbers, and I exited. Now you might think, well, why come out here? Because the market's going down so strongly, and the reason is because there's such a big, well, first of all, that's my plan, so that's what I do. I execute my plan, do it every time, do it religiously almost, you know, I stick to my plan. I always have done. That's what made me profitable in the first place. That's what took me to profitability, was having a plan and sticking to it. So if my rules say I'm looking for just over 1-to-1, I make a decision when I enter the trade what my target is, and I exit there no matter what. And so when the market came down here, I exited. It may well come all the way down here to the 400 level, and I'm not going to be in the trade. I'm going to be out of it. And the reason is because, look, this is the 8 moving average. The price is right down here. The chances are that you're going to get some sort of reaction and the market's going to come back up here. And the temptation then is to take the profit here, which will be considerably smaller than it would have been down here. So take the opportunity when it arises. It's hit my target and I'm out. And in actual fact, that's what price did. Is it came back to here, came down, failed to make another low, a lower low, and started peeling back up again. And so there was a double bottom opportunity which followed here. However, I didn't take it because the market's moving down so strongly, as you can see. So this would have been, looking at the double top opportunity here, this was pre-market, this would have been an opportunity for a double top trade here with the risk. So entry here, risk up here, and you can see on this particular spike here that traders entered on the spike. They entered somewhere here and they took profits down here, and that's why price soared back up. Price is driven by orders, and traders trade double tops and double bottoms. Professional traders trade them. You can see the same thing going on here. That's the risk. There's the entry, so you've got high, second high, middle of the highs, entry here, and price goes up, comes down as people start taking their profits at 1-to-1. Then, so risk, reward, people take their profits, price goes back up. So this is, the markets are driven by orders, and people look, professional traders and computers and algorithms look for 1-to-1, 1.5-to-1, sometimes in big trends on these type of trades. There are no shortage of these type of trades, so, and they provide a really good, if you get the criteria correct, if you get good at seeing them and good at executing them, then they can provide excellent probability, these type of trades. There are quite a few of them that occur every day, and they tend to work for me. So that's my double top trade today. Nice trade. Entry here, exit down here, and my risk was here. So good risk to reward, good probability on the trade. If you execute trades like that on a regular basis, you can definitely make an impact on building capital and income from yourself from trading. So my name's Anthony Beardsall. Hope you enjoyed the video. There's a superb example of double top trades on the DAX 1 minute chart. Hope you enjoyed it. Hope that gave you some good value this morning. And if you want to join us at the Excellence Assured Trading Academy, then I'd be delighted to work with you. And I'll catch you on the next video. Bye for now.